All right, from so-called new tech to so-called old tech. Qualcomm hit a new record high today. As it meets investors, our own Jim Lebenthal joins us now. I had to have you on, Jimmy, because the stock has been great. All-time highs. It's up 30% this month. You've got some fan talk on Twitter. Somebody says, please tell Farmer Jim thanks. I followed him in 6 months ago, and I'm extremely happy, as they should be. Stock's up 30% since then. Is this as good as it gets? That's the key question.
That is the key question. The short answer is no. Scott, this is a stock that deserves to trade at a multiple of 20 times. This year's earnings, and it's got a fiscal year that starts October 1st, it's going to earn over $10 a share. I'm telling you it should be at $210 right now. I'll back off of that and say it should simply be at $200. But the question is, why should it have a 20 times multiple? And the answer to that is answered in today's Analyst Day, where Cristiano Amon is making it clear that his stamp on the company is to diversify away from mobile phones. That's key. That's key because the 16 times multiple the stock trades at right now is based on the fear that Apple will insource their product, create it themselves, and cut out Qualcomm. Now, I think that's very hard to do from a legal perspective. But even so, the fact that Qualcomm has Internet of Things at 20% of their business, growing at 67% year over year, and then there's the automotive where they bought Veoneer recently, and then there's the metaverse. They've got all these things besides just mobile phones that are going to diversify their business and justify that 20 times multiple. So this is Cristiano Amon's signature, is diversifying. I agree with it. The street agrees with it. Should be $200 right now. I want to say one last thing. This is a clear case in why you have to be patient as an investor, because you will remember, Scott, stock hit about 166 earlier this year and then backed off to about 120, 125. Savvy investors picked up more then. You've just got to bide your time when you've got a quality company like this. Last thing, I'll say it again, should be a $200 stock right now.
All right, for the fourth time, this should be a $200 stock in the words of Jim Lebenthal. But, I mean, you're not the only one who's bullish on it. Jason Snipe, you own Qualcomm too.
Yeah, it's a great company. I mean, Jimmy knocked on a lot of the points that I would mention. Just diversifying away from the headset game, which is they own, quite frankly. But what I would say, too, is, the legal battles are far behind them. I think that the stock has been consolidating for quite some time. It was up 72% last year, and it's up 30% in the last month. And they had blowout earnings this past quarter. So I really like the runway. I really like the opportunity here in the near term and also into 2022 and beyond. So I think the earnings growth is there, and there's a lot of value here. So, yeah, we're very bullish on Qualcomm.
Doc, you bought some new calls today, I understand.
Yeah, bought the 165s today, Scott. My intention is that if Jason and Jim are right and this one keeps running, which I think it will, I'll be able to sell higher strike calls against them. When you've got this many levers, I don't know how you don't get into this stock. Like both gentlemen said, the metaverse, talked about it at the top of the show, how valuable that can be and how every CEO is talking about it. And then self-driving cars and so forth. I mean, Qualcomm is going to be not the one that develops the car, but the one that makes that car work. So I love all the different levers that they can pull here, Scott, and they're moving away from just that commodity business with the phones and phone sets into other businesses that are far more lucrative.